The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Time now to check in with Nikhilesh Day, CoinDesk's managing editor for global policy and regulation. Good morning, Nick. So, how are we? So, a U.S. senator, we're talking here about Pat Toomey from Pennsylvania, is turning his attention toward the Federal Deposit Insurance Corporation and how the agency views banks' involvement in cryptocurrency. So, he's talking about Operation Choke Point, which was a really sensitive issue some time back. Can you explain what he's talking about there?
Yeah, so the context here is yesterday, Senator Toomey sent out a letter to the FDIC, basically saying he had heard from whistleblowers and affected parties claiming that the FDIC's DC headquarters had been pressuring regional FDIC entities as well as banks to basically not provide services to crypto companies. And Operation Choke Point, of course, was this 2013, 2014 era operation by the FDIC and DOJ to similarly have the FDIC and DOJ government entities lean on banks that were providing services to payday lenders and gun issuers, or gun sellers, and kind of lean on these banks to not provide these services. And this was a huge area of controversy because even though the stated effort was to tamp down on potentially illicit activity and money laundering, valid concerns in this day and age, the concern was that it was also being used to tamp down on politically disfavored operations. So legal, but perhaps not as desirable. And in crypto in particular, the crypto industry has long felt that banks have been not providing services to crypto companies because the fact that it's crypto and because it's new and there's all these concerns about potentially illicit use. And what we've seen is that a lot of banks just don't provide services to crypto companies. It was a big deal when we found out that, for example, Coinbase had an actual banking relationship with a major bank. So, the FDIC, if these allegations are true, and full disclosure, we haven't seen the whistleblower communication, so we don't know what specifically has been said. But if these claims are true, then it would suggest that banks are, not providing services or to perfectly legal entities because of, the FDIC.
Any response from the FDIC to this, and where might this go? I mean, is this sort of stuff that can sort of lead to a broader legal challenge?
Yeah. So the FDIC, in a statement, basically said that it has the right to check for security and soundness. And if you actually look on the FDIC website, in April, they actually published a letter to all of the banks under supervision saying, hey, if you want to get in crypto, tell us first and let us know, and we will ask for information and review that and then give you approval. So, one possible explanation, I'm not saying this is happening, but one possible explanation is that the FDIC is sending these letters to banks, but it's because, it has reason to believe that the banks haven't provided all the information that the FDIC needs. This letter is actually remarkably similar to one put out yesterday by the Federal Reserve, which is also directed at banks under supervision, saying, "Hey, if you want to be in crypto, get approval from us." So the FDIC is not necessarily refuting that it's leaning on banks, but the question might be kind of, is this underhanded? Is this legal? What precedent does the FDIC have here? And those questions, I think, are still yet to be answered.